Every single week, I get calls, I get text messages asking me the same thing. And that thing is, what's the best rate that you can get for me now? My mortgage is up for renewal, and I want to know what you can do. And this talk that we're about to do today is to address that question, and I'm going to do my best to stay calm as I go through this, because let me just say it once at the top, it's not about rate. It has absolutely nothing to do with the interest rate that you're paying, and everything to do with what you can actually afford and what your plans are for the next 3 years, 4 years, 5 years, however long that mortgage term is. And so that's what we're going to talk about here today, and how you can take this mortgage renewal opportunity that a lot of people are coming up against, including myself, to restructure your life. Today, I'm sitting here with Luigi Chirocco. And Lou, it's been a while since we've sat down. So take a second, tell people who you are, what do you do, and then we'll dive in.
Thanks, Clyde. Good to be back. I'm the guy who pulls the strings behind the scenes here at Uptown.
You're the puppet master's puppet master?
I don't know what that means. And if there's some naughty context there, so I don't want to answer.
Whoa.
But I underwrite for the brokerage. I am now one of the faces for the private side. When brokers go to our trade shows, they'll see my lovely mug.
Good or bad?
I run my own small book of business for my own clients, and generally just talk all things real estate and lending.
And that's why you're here today.
It's my passion.
It's your passion. We got to be passionate about something.
As a fellow man of passion.
Yeah.
That's why we get along, probably.
Yeah, I know. It's got to be something, right? Between that and football.
Yeah, exactly.
So, look, today we're doing something a little bit different, like I said. We're not talking about rates. We're talking about the thing that really matters in today's market. You know, I think just about everybody that has a renewal that's coming up over the next, year and a half, they're probably like ear to the ground, and they're all hearing the same thing. It's the renewal wave, your payments are going up, and you got to get a low rate. And it's driving me crazy. I've just got to be honest. It's driving me crazy. Because, I don't know, maybe it's the algorithm. I got to change my algorithm and put more things on it that are not mortgages, because every time you do the scroll, I look and it's another face that's talking about renewals, talking about interest rates, talking about, all the things that don't matter. And not one person's talking about what can you afford? What is your plan? Why are you choosing the 2-year, 3-year, 5-year term? And I look at it now, or I'm sitting here now, and I'm saying, let's take the opportunity to have the real conversation, the conversation that people actually need to hear, which is you got to make a plan, and it's got to be a plan that you could afford. So what do you think? What do you got to say about that?
My first thought is, I don't know if we're getting better or worse with this kind of stuff, because like you said, people's algorithms, rate is, it's out there on social media. Mm-hmm. You hear certain individuals with a large following that it's just all about rate. Get the best rate, doesn't matter what else is going on. Rate has a part to play. I'm not going to sit here and say it doesn't.
Yeah.
But in terms of the list of things that we're trying to look after for a client, it's everything else. And then once we've narrowed down what the right fit is, okay, now let's go and get you the best rate.
Correct.
That fits the solution.
Correct.
It's not rate first, and then it's like me going in to buy, a hybrid or something.
Who?
A hybrid.
Oh, a car.
A car. A car. And then the salesperson just saying, I don't have a hybrid, but I have this other thing for you. It's cheaper. Yeah, but I don't need, like, that doesn't fit my lifestyle. It doesn't work for my family. So why don't we first have the discussion about what fits for my family? Okay, and then I'll haggle on price, right? Like, that's the equivalent, I think, on the mortgage side.
But you know what? Good point. It's
Not
true.
bad. I didn't even think about that. I'm just spitballing.
But isn't that
Not
the
a
best
bad
part?
analogy.
It's a great
I come
analogy.
in for something.
Yeah.
Maybe I don't even know what I need yet. I need an expert to talk to me about what type of vehicle is going to work for my family. And then we'll talk about the price once we have a fit. But why are you trying to sell me something cheaper that I have no need for?
Exactly.
That in 3 months I'm going to maybe have regrets or hate, or I'm going to end up selling because I need to get into something different. And the equivalent happens in mortgages too. You have regrets.
Of course. You buy a
Maybe
house you don't like.
Yeah,
You buy in a
or I
neighborhood
should've
neighborhood you don't love.
Yeah. Price is driving everything versus where do I actually see my family? On the mortgage side, we see it as well. Lower rate. Oh, shoot. I should have extended amortization at maturity.
Yeah, 100%.
I didn't. Now I got to refi midterm.
Yeah.
So I don't know if we're getting better is the answer to my question, because it's still out there in the ether that rate. And, you know, listen, I've participated in as well. If we get a rate special, I'll certainly advertise it. I'll put it out there and let my people know that
it exists.
Listen, there's something out here that is pretty darn nice, but it's an if it fits you type of vibe that I'm trying to put out here. I'm not trying to sort of say open for business. Let's see how many mice I can get in to eat this cheese.
So basically, what you're saying is you're part of the reason why my phone started ringing and everybody was asking me about rakes. It was your fault.
I'm part of the problem.
He was definitely part of the problem.
Part of the problem.
Okay, so
thank you. That's what you took from this. You know, another trend that I've seen on social media is mortgage influencers with very strange shoes. And I really hope, maybe cut to the wide shot here, Evan, that your people, you must really, like, you're ingrained with them, that they trust you blindly, because if they're taking advice from somebody wearing these moon boots that you've got on today, God bless them. So we need to stop these mortgage social media trends.
Anyhow, I love my shoes. They were something that I wanted, not something that I needed. And when you talk about planning, I also include an element of, personal spend, because we're real people, right? And you're going to spend money.
In all seriousness, yes. Life is to be lived.
Yeah, 100%. So here's what I'm going to say to you. Going back to the original topic. Phone's been ringing and everybody's talking about rate. And what I'm deferring or changing the conversation to is all about, okay, so you have a mortgage renewal. What's your plan? What's going on with the family? What's going on with the kids? Are they going to high school? Are they going to college, university? Are they moving away? What's going on with your savings? Have you, utilized any savings over the course of the last 3 months, 6 months, 1 year, 2 years, 4 years, COVID? Like, what's the financial situation today? And let me tell you that once we start having that conversation and I'm asking them, okay, so what are you spending on your Rogers bill? What are you spending on your cable bill? What are you spending on your car bill or your car loan? What does your credit cards look like? How much do you spend on groceries? Do you want to have that conversation?
Yeah, it's stupid expensive.
So when you factor all of these things in, including food, why are you talking to me about the interest rate?
Well, we've discussed this. That's what's out there. That's what people know to ask. But I will say, I've been thinking about it while you were talking there for a long time, is if you're a client and your broker or your agent is not asking you more questions than you're asking him or her, run away.
Red
Get
flag.
a new agent, get a new broker.
Red flag. I'm
they
saying
should be
it.
asking you more questions than you have for them. Otherwise, they're just an order taker. They're just, do you want fries with that?
Exactly. So you're going to trust your mortgage. Listen, I got a big mortgage. I was one of those people that bought a house during COVID. I got a big mortgage. And if I'm picking up the phone and I'm calling whoever it is, and I'm saying, what's the best rate? And they say 4.34. And I say, okay, sign here. If that's the end of the renewal conversation, run.
But people are signing on the dotted line. I'm seeing these situations where customers have recently renewed, and not to get super technical, but I know they've renewed into insured or insurable pricing because they fit that box.
Yes.
So more than likely, not more than likely, because I've had conversations and they've kind of told me like, no, we didn't really talk about this, or we didn't really talk about that. So more than likely, but with a good sense of certainty, what happened was rate led the conversation.
Of course.
And I know that on the insurable side, or if it's insured and I want to do a straight transfer, I can get you pretty damn good rates.
So Lou, for the everyday listener, I'm going to ask you to just do me a favor. Can you tell us the difference between an insured and an insurable mortgage?
Ultimately, my understanding of it is ultimately they're the same thing. One being that the client paid the insurance when they got the mortgage. So more than likely they bought the house less than 20% down, and they paid for the default insurance in case, you don't pay your mortgage. The bank still gets looked after by the insurer. Insurable is, I guess, a term, I'm not an expert in this, but I guess it's just a term that refers to a mortgage that qualifies to be insured, essentially. So in other words, it fits the insurer's criteria.
Fix in the box.
It fits their box and may be insured without the client even knowing it, because they are not paying the premium.
Correct.
That's my everyday man explanation.
That's pretty good, though.
Insurable.
That's pretty good.
But what I'm referring to here is the rates that come with these products.
Correct.
So because they're insured, the bank is willing to give bigger discounts.
Better rates.
However, if you don't fit the box, or I shouldn't say that, let me take that back. You fit the box, but maybe something that made more sense for you is available out there that came with a higher rate. Often what's happening is people are signing on the dotted line because they came in with low rate as sort of this is what I'm looking for piece of the puzzle. And the broker, rather than doing a deep dive, an analysis, asking more questions than your client, just kind of already thought, I know where this will fit. I have a lender that's giving a good rate on a 3-year fixed right now, insurable, and these guys fit. And then bringing it back around, I've had a couple of conversations recently where a client is having regret that they've signed because they realize I'm at an 18-year amortization in one case.
Exactly.
And, now some small change in my life has happened and I need a little bit of cash flow relief. Well, why? Was it truly sort of a life-changing, unexpected event that just happened? Or if I would have asked you about this, would you have known this was coming? And maybe it would have been a good idea to have a discussion about it at renewal so that we could have put you in a product that allowed for this life change, this flexibility to happen without now staring down refinancing midterm. Now we have to look at, well, what lender are you with and what are their rules for refinancing? And, it may not work out favorably. So you got the best rates, lowest rate is not always lowest cost.
Yeah.
We're back to that cliche.
There you go. Very true. Very true. So much so that we're here talking about it at great lengths. So here's what I would say. Or one of the things other things that I wanted to say here, like many that have mortgages that are coming up for renewal now in the next 12 months, 18 months.
Yeah, me next week.
Yeah, me. I just I'm closing next week. from the rate that I had during COVID, one of the COVID specials, 1.95. Like I can't believe that I had that rate.
Not me. I already got hammered 3 years ago, so
I
took my licks already.
If I'm gonna say one thing that you should always listen to, where I've always done well, and this is a Clydeology, okay? This is not proven outside of this is what I've done.
Clydeology, oh my goodness,
okay?
This guy.
I'm making this thing up as I go. When everybody took the variable rate during COVID because rates were super low and the discounts were amazing, I did the opposite. And I've usually done the opposite of the general population during the time that I've held mortgages. And I've generally done pretty well because I got a fixed rate at 195 when rates skyrocketed. And I'm going to make the bet, I'm making the bet that the next 3 years, the variable rate will be the place to go. With a discount, that's the bet. And if I'm right, I'll do well. It's like, you put some money into the stock market. Well, I'm putting money into the real estate market. It's the same thing. But when I do it, I'm making sure that I have a plan that can support it.
Yeah, good point. I mean, it's not a catch-all for every person, that philosophy. But if that's what it is for you,
that's why I call it a Clydeology.
That's fine. That's no problem. Like when people ask me, like, what do you think is going to, or not what do you think is going to happen? That's fine. That's a fair question that I love entertaining. But when they ask me, what should I do? I don't know.
What do the numbers say?
I really don't know. Like, that's where we need to ask 17 questions, and then I can maybe nudge you in one direction based on like what I'm hearing from you.
Well,
so
I look at, I mean, there's a heck of a lot more to that comment. 1.95 for a guaranteed 5 years on a high mortgage balance. I'm going to lock that sucker in so I know that I can slam as much money against it when I can. I'm going to get rid of as much debt as I can over the next 5 years so that when I come up for renewal, I should be relatively debt-free. And now I can only focus on my mortgage at a higher interest rate.
Yeah, but see, that's not for everybody, right? Because others might argue, I'm paying 1.95% on my mortgage. Why would I aggressively pay this thing down?
No, pay down other debt. Pay down other debt.
Or put money into the market or invest in other things.
Exactly.
Because if you're below 2% on your mortgage, it's cheaper than, it's free money.
It's free.
Because it's less than inflation.
Yeah.
So someone might think that way. But at the same time, again, there's a million things. And I can use my own personal experience here as a client is I'm very much in a position where I'm like, do I pay down my mortgage a little bit more now? Or do I invest? Now I have an FA, great guy. Of course, he wants me to invest because, well, scorecard and whatnot. But I also have to think about cash flow, right? That's there's things on paper that you should do this. Great. But my wife's not working right now. So if I don't pay down my mortgage to invest, yeah, there's an upside for sure. But I also still have to make my monthly payments on that mortgage.
Yes.
So you need to sort of, now me, I'm often talking to myself in the mirror because I work
admit to that,
in the industry and, then I bounce it off what do you think about this, honey? What do you think about that? This is what I'm thinking. But if you're not in this world, perhaps you need to sit across from one of us and have similar conversations and express very real concerns. That's the other thing is I also am a believer, number one, your broker needs to ask you more questions than you ask them.
Yeah.
And number two, you should never be bullied into something because you're too shy or afraid of sounding foolish with a question. Like, don't sign something unless you are confident that your needs, your questions, your valid concerns have been addressed. Just like for me, if you tell me, you need to put your money in the market, you're renewing now at a lower rate than you're going to get on return, you'd be a fool not to. And now maybe I'm shy or tentative to ask because he knows more than me about this stuff. Like, I don't want, he's right, whatever. And then now I'm paying $4,000 a month mortgage payment that I cannot afford. Well, now what? Now I'm screwed. So, yeah, I don't even remember where I was going with this, but your broker needs to ask you a lot of questions, and you need to make sure that all your concerns are addressed, and there is no one-size-fits-all solution.
This is true, because really at the end of the day, it's all about affordability at the core. And there's no way that your broker, your bank specialist, mortgage specialist can say to you with confidence, this rate is the best, quote unquote, best rate for you, because it's not about the rate. For me, the purpose behind this is to make sure that we're driving home the fact that people need to take the time to stop and look at their budgets, look at, the Netflix, look at the Amazon Prime, look at the, various subscriptions that you might have, add all those things up. And when you look at all those things and the spending that comes along with, Uber Eats.
Mm-hmm. This is sort of tying into what we said. You want to live a little bit too.
Yeah.
You want to do things outside of just the core expendidures. But that make life enjoyable. You don't want to just live to be a slave to your house.
I'm not telling you to be a monk, okay? Pardon the monks. No knocking the monks.
Don't disrespect monks like this.
I'm just saying. But
how dare you?
All I'm saying is, I was having a conversation the other day, and I again, because I was, I stopped. I was looking at my mortgage. I'm doing my plans for the next 3 years, right? Because I'm taking a 3-year term. So I'm like, okay, if I'm taking a 3-year term, what do the next 3 years look like for me financially? What do I spend every month? What are my fixed costs? What are the things that I know that are not going to change? What is the debt I can get rid of? What does the investment philosophy look like outside of what we're doing in the real estate market? And I looked at, my Uber bill. I looked at, money that you spend going out. And the conversation I was having was, the cost of going out now is absolutely ridiculous. And where we used to...
I wouldn't know.
Well, I'll be honest, where we used to go out, maybe every Saturday, right? 4 times a month, we would go out, have a dinner, see something, whatever it might be. Now, maybe I go out every second Saturday because, you got to adjust, right? And for some, that might be, maybe I go out once a month. For some, that might be, maybe I'm going to buy a steak and put it on the barbecue. It doesn't really matter. It's about what fits your plan. And I don't see anything wrong with that.
I think it has to be that way. Listen, I'm not against sacrifice. I'm very old school, as you know. I think our current generation, we are almost entitled in some ways. My parents never went out for dinner 4 times a month. Mm-hmm. Never, not even 4 times a year. It was a different time. But I'm not against sacrifice. I'm not against, again, for myself personally, okay, my wife's not working now, had the baby. I'm prepared to sacrifice over the short term because I understand the trade-off. Having her there with my son versus having him in daycare, it is a trade-off. There's going to be sacrifice somewhere. Now, establishing that, when I go and look at the financial side, now I need to consider that in my affordability piece.
Exactly.
And I saw something that I actually really liked online somewhere today. Affordability versus eligibility. And I've kind of talked about this, I think, when I've been on here before, not using that exact language, but it goes to the what do I qualify for versus what can I actually afford?
Exactly.
Because along with what's your best rate, another common first question that someone comes in with is, how much do I qualify for? And
yeah, especially for the first time buyers right now that are looking at, how do I get into the market? How much can I afford?
Absolutely. And with a lot of, I find this with younger people, perhaps it's just down to less life experience than the older generation.
He's calling himself old, not me, by it, just to be clear.
I'm not even talking about myself. But if I have somebody in their, let's say early 30s, late 20s, if those buyers even exist anymore in the GTA.
Let's help them find a way.
They are more willing to go to their max in
Yes.
terms of qualification.
Yes.
And I'm almost a little gun shy for them because this is where the questions come in. Have you considered this? Have you considered that? You're at that age where perhaps babies are going to be factoring into your life here soon. So if one of your incomes is reduced significantly because you're on paternity leave, maternity leave,
Listen,
you have to furnish this place. Like, you haven't been through this before. That's where I say the older generation, it's a little bit different. They've likely experienced something in their life.
I remember walking, we walk inside the house and all of a sudden it's like, what's going on? Something's weird, right? And it's like pregnancy test in hand, right? Like life changes.
Yeah.
Life happens when you have a plan.
Plan or no plan, life's going to change, but with no plan, I don't think you have much of a chance. It's going to cost you more money in the long run because you're going to have to keep pivoting, and pivoting in the mortgage world doesn't always mean you save money.
No. In fact, I'll tell you from my life experience, because when Natasha told me she was pregnant the first time and we had twins, well, life changed regardless of the plan that I had. But I'll be honest, it was my first house. I wasn't really, who I am today and such an intricate planner that it cost me dearly because I had to pivot. I had to break my mortgage. I had to pay the penalty in order to be able to move forward.
Yeah.
These things happen.
Yeah, it happens. You can't avoid it all. No. But certainly starting with a nice plan and taking the time to actually have all your questions answered positions you better to avoid these things.
Mm-hmm. I mean, I could have this conversation all day, right? But the real point of the whole thing is really just to make sure that people really understand. Rate, it's not nothing. It matters, but it's not the first thing that you need to consider. And it's definitely not the number one thing. What we really want you to focus on is affordability, planning, making sure that you're evaluating or building a plan that really fits for you today and what could come in the next 2 years, 3 years, 5 years, however long that mortgage term is going to be. Any closing thoughts?
Well, I was going to add, even on the real estate side, I'm sure you see it where max I can qualify for takes over. Maybe not takes over, but that's what the client maybe comes in with.
I want the biggest house on the best street.
And you're like, hold on here, but what about neighborhood? What about lifestyle? Where, like, the numbers for me are sort of secondary, even on the real estate side, because sometimes we're having those conversations before it even gets to a realtor, before the client's even working with a realtor partner.
That means we're doing our job, because they should be coming to talk to us first.
Agreed. But I'm sure you, given that you do real estate, you see it as well, where the client's so like got the blinders on and it's just numbers. And God bless them. They're trying to be, they're trying to do their due diligence with respect to affordability. But hold on, just because you can buy the detached home in Innisfil, let's say, if that doesn't work, that location doesn't work for your life, where your friends and family are, where you work, where you see your kids being raised, then why are we going straight there? Why are we not considering these other things first and then have a discussion about here's what you can afford in Vaughan, for example, versus Innisfil? Your money will go further here. However, quality of life, what other things are important before you just jump there?
100%.
I'm sure it happens.
Oh, man, that's a whole new podcast, because it happens more than you would think. Within the 10 people that I can think of at least 4 cases that, of people that it's happened to where they've relocated either out of Vaughan or out of, other areas into areas that they deem to be more affordable and have regretted it and, lost money.
Well, COVID helped that too, because people thought the work from home thing was going to be forever. I have colleagues in my former job at the bank who moved to downtown Toronto location office, who moved to places that I barely had heard of, east of Bowmanville, like places like this where you're like, so you just think we're never coming back? You're just taking the chance. Yeah, like you're like, I'm going wherever. Come find me. Like,
but
and then they regretted it after.
Well, they forgot that you're playing in the real estate market, Lou. If you have property, you are participating in the real estate market. Can I say that any clearer? I don't think I can.
Yeah, for that, go ride the GO train a few times before you buy that house. Just simulate the commute.
I tell everybody,
go by morning, midday, and at night.
Yeah,
and
go
see
drive.
what it's like.
Have to. You can't buy a house in an area unless you go and you see what it's like. You have to. I won't even do the transaction.
Yeah.
So, we talked about a lot. Anything else?
That's it for me. Distracted by those shoes.
We'll leave it there. And look, we're joking around, but at the same time, if you have a mortgage that's coming up for renewal in the next 6, 12, 18 months, and you're not quite sure if you have the right plan, if you have the right rate, if you have the right philosophy, give us a call. We'll be happy to have a conversation and see if we can help. Uptown Experts, till next time.